Welcome to the DeFi podcast, where we attempt to imagine the future of crypto, because foresight is what makes great investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment. All statements made by hosts or guests are strictly beliefs or point of views and are not recommendations to buy, sell, or hold any security. Hosts or guests may hold certain securities discussed in this podcast.
Hi everyone, this week we have FireStorm, who is the CEO of FireStorm Capital and an advisor for Dexalot. We're going to talk about Subnets and the Dexalot Subnet specifically. Welcome FireStorm.
FireStorm, welcome back to the show.
Hey guys, thank you. Thanks for having me again. Last time was so much fun that I figured we should do at least one more time.
Let's start with the Dexalot Subnet. Why does Dexalot need a subnet? Maybe we can start there.
Yes, of course. So just to take a quick step back, I'm not sure how many people are familiar. Let me just do a very quick explanation of what Dexalot is. So Dexalot is a decentralized central limit order book exchange currently on Avalanche C-chain. Okay. What does central limit order book exchange mean? It basically means a traditional style exchange like most people are familiar with, such as Coinbase, Binance, NASDAQ, whatever that may be. Basically, there is an order book which contains, the bids, i.e. people's willingness to buy certain assets, and offers, which is people's willingness to sell certain assets. And these bids and offers are displayed in a unified fashion for everybody to see. Dexalot is exactly that kind of an exchange with an order book. Except, unlike Coinbases and Binances of the world, it's fully decentralized, meaning the order book itself is on-chain, executions, transactions, and everything that happen on-chain. This gives it a big advantage when it comes to transparency, evening out the playing field for traders, and given that the application is running on Avalanche, it gives it speed, high throughput, etc. Now, just to touch on what subnets are also, subnets are additional capability that the Avalanche platform provides, where you can, basically create a blockchain of your own that is still connected to the Avalanche ecosystem. It is sharing validators within the Avalanche ecosystem, except that blockchain is specific for your application. Okay. So Dexalot being an exchange, it makes a lot of sense for that platform, for that application to have a blockchain of its own, because what we've observed since we deployed, and this was quite surprising actually, was that when you deploy applications on C-chain, there is more than just you who's operating on the C-chain, right? Crabata being the most successful game on Avalanche so far, basically became so popular that a lot of people were playing the game. There were a lot of automated activity, bot activity that was interacting with the game, and it was ending up eating into the bandwidth that potentially people needed to be able to do stuff on Dexalot, right? So, deploying something on the C chain is great because the network is already ready. You just write your software and deploy it. But if you want to scale to a lot more users, moving your application to an application-specific subnet makes a lot of sense. Now, this is the number one reason. But of course, moving to a subnet of our own that we ourselves can design means a lot of advantages for the application as well as the users. So just to touch on a few, and I'll stop talking. Number one, C-chain fees are effectively controlled at the moment by AMMs, right? They define what the fees need to be. When you move on to your subnet, you can define what the fees are, right? Effectively, because it's a separate blockchain, because you're deploying a separate set of validators, you can make the fees higher or lower depending on what your needs are. From an exchange perspective, the lower the transaction fees are, the easier for people and market makers to trade, right? Second aspect, which I already touched on, is reduction in latency or interrupts, right? In the TradFi world, latency is of course very important. The same idea applies to blockchain, and creating a subnet that is specific for trading rather than the generic EVM that's, the C chain runs on, allows you to optimize for speed, quicker finality, if you will. And it increases your speed, it reduces your latency. Those are the immediate things that, we are going for. Separately, for the future, having a completely custom fabric that is intended just for exchanging assets means, we can implement new things. One idea is, for example, if there is a use case on Avalanche to trade security tokens, and security tokens were a big thing back in 2017-18, if there is a use case for us to trade security tokens and, we have a clear guideline from the regulators as to how those assets can be traded, we can enhance the subnet, or we can create a separate subnet that allows, KYC'd and accredited investors to actually interact with. You can directly build it into the subnet, which actually will allow Dexalot to become a securities exchange as well. So, it's basically a super custom, base layer that you build your application on top of. The immediate things that we see in the near term is fee reduction, latency reduction, speed increase, and interrupt removal. But I feel like, this is a topic where features are endless. I mean, there could be a lot more features depending on what the use cases are, and we can build them without affecting the rest of the network.
So I was thinking that the Dexalot Subnet, the fact that you have institutional market makers, and this is just a club that just functions almost like any centralized exchange would. You basically, this would be, if you're super successful, let's say, there would be no more need for LPs, AMMs, or anything of that style, like we've seen from Uniswap, SushiSwap, Trader Joe, maybe. Those would be kind of irrelevant, right? They would be useless at this point.
So, very tricky question, of course. Got to make sure that I don't say the wrong. But so, okay, let's think about two things, right? One, why did Uniswap come to be, right? The reason, which is personal opinion, but I think it's fairly obvious, is that Ethereum wasn't a great piece of infrastructure for a central limit order book style exchange to run. I know this because I was involved in a club project in 2017 running on Ethereum. And while it worked, just like Dexalot works, the big difference was it was expensive, it was slow, and the issue wasn't with the exchange, the issue was with the base layer, right? So the folks who created Uniswap created the mechanism underlying it, i.e. the constant product formula and locking up LP capital to provide liquidity, to solve the issue on the protocol level. And they're geniuses for doing it that way, because they removed the need to deposit assets into a smart contract. They also removed or reduced the number of clicks needed, and you pay the fee once rather than multiple times, right? And that's how sort of Uniswap came to be. There's obviously trade-offs there. The trade-offs being when you as a user lock up capital in an AMM pool, you're risking impermanent loss, which is basically if one of the assets increases in value versus the other, your net portfolio value, inclusive of the fees, will be significantly smaller. And then there's, of course, the MEV aspect, where every time there's a price mismatch, there's a bot that's coming and arbing the pool, effectively reducing your share, right? And but still, from a trading perspective, it worked. It solved the infrastructure problem, but it also innovated on the UX level. So I kind of want to separate the infrastructure issue being solved as well as the UX improvement. So from a central limit order book becoming very successful, and hopefully, Dexalot gets there, we're working very hard towards it. We will provide capital efficient trading, right? So in that sense, as we ramp this up, as we onboard more institutional market makers, as we basically start adding more pairs, yes, the pricing capability that a central limit order book has should be much better than an AMM. I mean, this described in another way, for you to get very tight pricing for large sizes on an AMM, you need to have an incredible amount of TVL, right? So very high amount of TVL may be possible on AVAX USDC, for example, but it's not going to be possible on smaller projects. And especially when you hit a bear market where the prices are tanking, that means your TVL within an AMM is actually going to go down, which means the net price that you're going to be getting for trading within an AMM is actually going to be worse, right? In comparison, on a central limit order book exchange, you actually have market makers who can keep prices much tighter with a tiny fraction of the total TVL that you would need on an AMM. Like the comparison would be if you need $1 million, and I'm just making numbers up, $1 million to keep a 50 basis point price on an AMM pool, a market maker can just do it with $20,000 as long as there is decent two-way activity, right? 50 basis points with $10,000 versus $1 million, big difference. So in that sense, yes, if a central limit order book is successful and we get a good number of market makers, which is something we're working on pretty hard, the need for LP liquidity should disappear. My personal view when it comes to LP liquidity is most people, when they join these farms, were kind of like they see the farm rewards, right? You see, there's like 700% farm rewards on two assets at the same time, and they sort of like those percentages at the expense of impermanent loss. Obviously, when the markets are slowing down, the impermanent loss becomes a little bit more obvious, and people are learning. And I think a lot of people are already a little bit less interested in pooling liquidity in AMM pools.
Yeah, I think the big downturn is starting to show some problems with exposure to IL and grouping your assets together like this.
Yep.
And then there's also the aspect that so many tokens need to put out so much emissions to just attract that liquidity in the first place.
Exactly. And like one thing that I've actually been seeing a lot more on crypto Twitter over the last few days is like, people are finally waking up to the situation with MEV and bots, right? This is true in the case of trading. People are sandwich attacking, large orders. People are sandwich attacking the hell out of initial listings. And I can give you data points in this regard as well as even mints. Right, I've seen a lot of threads over the last few days where there is an awesome trend right now in Avalanche where artists and NFT projects are doing free mints, but then when you look under the covers and you look at who minted what, there is an incredible amount of bot activity. Like I've even seen a thread where one participant minted an entire free mint. Right, like people are still learning when it comes to how to trade safely, how to interact with DeFi safely. And, I'm one of the firm believers that a club with a limit order capability is a much better way for people to trade, not just because of capital efficiency, but also from a safety perspective.
So
right.
While we're on this topic of clubs versus AMMs, does the Uniswap V2 versus, so currently what Trader Joe is using on Avalanche is essentially, I believe, a fork of Uniswap V2. Uniswap V3 is more capital efficient. It comes and solves some of these issues.
Sure.
Do you have anything to say about that? Like, does that change the math a lot?
Yeah, of course. So, I mean, Uniswap V3 is actually an attempt to come closer to a central limit order book style solution, right? Now, let me ask you this. If you, as a user, had a great view into where the market is and you had the capability to predict where the prices are, would you ever bother providing liquidity?
Obviously not.
Yeah. And like the reason why the reason why I asked this question is V3 is designed to create price bands, right? You're supposed to know where you should be providing liquidity, blah, 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 right? If I'm a user, like I think the main issue that I'm seeing from the general participants of trading, not everybody, of course, there's pro traders out there, market makers out there, but most people like don't fully understand these tools that they're using. And Uniswap V3 like increases the complexity astronomically, where I don't know, it's a clever idea, it's a clever idea to improve the traditional AMM style liquidity pooling, but then, now the burden is shifted to the end user where they need to figure out what price bands they're supposed to provide liquidity at.
It'll be a very
Go
good
ahead.
tool for very sophisticated users, but I think just the average person who wants to
Yes.
come into a quick trade, I think that it'll be too complex and maybe not even worth it, or not
Yeah.
to trade, but to provide
Yeah.
liquidity. It's most people don't know or have a very good range
Yeah.
of what they think the market's going to do. They just think it's going to go up or it's going to go down or it's going to go sideways.
Exactly. And I mean, there's plenty of opinions on this as well. Gun has spoken about this in the past as well. I think his messaging was similar. It's a complicated hybrid type solution which increases complexity at the expense of most people, and it tries to come closer to a central limit order book exchange. If we have a piece of infrastructure that allows for quick finality, high throughputs, why would you need Uniswap V3 over a central limit order book exchange? I myself have never heard a good answer to this question. And I'm quite open-minded, man. Like, I looked at all these. Again, I believe the AMM solution, Uniswap on Ethereum, was very, it's a genius level solution. It's the most popular product on Ethereum anyways. And I just think that as the protocol itself evolves and it gives you the ability to operate like TradFi, people are going to go back towards the TradFi style of trading. Let me also throw a more practical curveball to you guys to think about. TradFi as an industry, traditional finance and trading specifically, have been around a long time. There are many companies entrenched in the way of central limit order book style trading. And when we all hear these, institutional people are coming, it's going to be much more difficult for them to adopt something like a Uniswap V3 over a central limit order book exchange, right? These guys understand limit order books. These guys know how to operate on them. And having a central limit order book solution where they simply need to change their code such that it interacts with DeFi rather than a centralized Binance is going to be a big advantage to onboard those users. So my second point here is that I think institutional hedge funds, market makers, algorithmic execution providers, banks, every single one of them is going to be a lot more warm to the idea of a central limit order book exchange rather than a Uniswap V3.
Yeah, they're not going to have to completely retool.
Exactly. Like, risk management on V3 is going to be a lot more difficult. I think you touched on the technical parts as well. Let me just emphasize one last thing here.
Mm-hmm.
And I'll give you example from an FX market, right? In FX, there is something called last look, right? Simplified, it translates to roughly 50 to 60 milliseconds of latencies when you do an FX trade in the market. FX trades are typically OTC, so your trades may take up to that much. C-chain on Avalanche today, you can get transaction speeds of 300 to 500 milliseconds, depending on where in the block you land. And the subnets, and this is what I was talking about when I said speed increase, by customizing your subnets specifically for trading, you can reach comparable speeds to TradFi. Think about it, right? If I can actually run a piece of infrastructure that mimics the TradFi infrastructure that institutions are used to, market makers are used to, with the added benefit of, hey, you can't get front run, or if you do, you will see it. Regulators won't have to ask you questions because they themselves can look at it on the blockchain. I think it's a no-brainer, right? I think, that's the most powerful aspect of the subnets and running an exchange on a subnet where, people will simply be able to switch from a centralized exchange to a decentralized exchange, and everything else will stay the same. So I just wanted to mention that as well. Even latencies will stay the same, hopefully.
So one of the things I wanted to ask you about was by the numbers and by the nitty-gritty details. Exactly how much more efficient is, first of all, a subnet, and secondly, a club on a subnet? How much more efficient would this system be than what we're using right now in DeFi, let's say both on Avalanche and Ethereum?
Sure. So it's very difficult to give exact numbers when it comes to Ethereum, but on Ethereum, the average safe confirmation times are somewhere around 10 minutes, right? If you crank up the fees, you can reduce naturally. But if I'm an average user trying to trade, I'm not going to mess around in my MetaMask to decrease the fees. And on a good day where the network isn't clogged, I'm probably going to need 10 minutes for my trade to settle.
Can we just acknowledge that that's a ridiculous number?
Yeah, absolutely. I mean, like, bro, if you ever mentioned 10 minutes trade settlement time, and it's not even a guarantee, you can still get rolled back if you're on Polygon, like they're gonna reorg a 56 confirmation, chain.
Yeah.
Like, it's insane. People will laugh you off the room in TradFi because that's not how TradFi works. That's not the expectation of a trade confirm, right? Now, again, circling back to TradFi FX markets, 50 to 60 millisecond latencies are the norm today, and those numbers are actually going down. Like, big banks are pushing those numbers to go down so that everything is near instantaneous. Avalanche C chain, when we looked at it originally, obviously you get a block every 1 to 2 seconds, but depending on when you do the transaction, you can get to 300 to 500 millisecond confirmations. Right? I'm not talking about a MetaMask interaction. I'm talking about an API direct interaction. And when we originally discussed the concept of subnets with Avalabs, their theoretical numbers that they provided to us, if we customized the subnet just for exchange capability, was anywhere from 10 to 100x improvement in speeds, right? So if we take the 300 to 500 and just divide it by 10, it's 30 to 50 milliseconds, which is comparable to TradFi. So in that sense, I think the subnets, especially when paired with a good set of validators, because obviously you don't want to have any toasters running the subnet, will actually be comparable to TradFi. Man, I'm not going to lie, this has been sort of a dream, vision, whatever you want to call it, for a long time for me. And I even pitched this decentralized central limit order book exchange idea to my superiors when I was at a bank a while ago. It's been a couple years since then now, but I firmly believe that the subnet technical capability when it comes to speed, ability to control fees, will really provide a great user experience to the end user from a fees perspective, speed perspective. And it's going to open up all these institutional players to come and start playing in the DeFi space a lot more. One thing to add, by the way,
Yep.
The user experience. I think I touched on that. That part still has a little bit to go. Like, user experience is more than just the technicals, right? And from a central limit order book exchange, there is a deposit function that you have to deposit assets to trade spot, right? When you do the trading in a subnet, there is the bridging aspect. All of these things, in my opinion, need to be seamless. On the Dexalot side, we've been doing a lot of things to make these seamless, but also on the wallet side, switching from the C chain or another blockchain to the trading subnet needs to be seamless. It's not there yet, but it's on the way. I've had this exact conversation at Avalanche House with the lead developer for Core, and great things are coming, at least on the Core side. And I feel like all the other wallets that are being built will eventually have to support multi-chain capability in a seamless manner. So I just want to add that as well.
Would you kind of agree with me that I think the Avalanche Core wallet that they're developing is going to have a huge improvement over what we're using with, let's say, MetaMask right now?
Bro, I mean, like, we already have a huge improvement over MetaMask. The biggest, to be honest with you, most important thing that needed to change was the suggested fee mechanism. Right? MetaMask is very Ethereum specific, while Core Core is built by the guys that understand Avalanche, right? It's not a generic one size fits all. So that was the biggest thing. But of course, I think Core at least will dominate from a wallet perspective, from what it looks like, because it's being built by guys who are also building the blockchain. So yes, there is going to be significant improvements versus what we're using. Hopefully, other wallet providers will notice how wallets should be done, and they'll improve themselves as well.
Yeah,
it's a very competitive market as well. So I think good things are ahead for us and our users in terms of wallets.
Yeah, I've always suspected that a lot of those big price spikes in the Avalanche, like the gas prices, I always suspected that was kind of driven a lot by MetaMask because they have some
Yes,
pretty
absolutely.
substantial sort of bidding and pricing aspects to
Absolutely.
it.
I think MetaMask is designed for a blockchain that doesn't clear transactions as fast as Avalanche, just to put it simply. So the way it approached to increasing the fees probably were unnecessarily aggressive. And once a person, just taking a very basic mathematical example, if the wallet sees fees at 50 Gwei, if it increases it by 25% rather than 0.1%, like it's very exponential and it increases very fast. And once a person pays 75, next pays 100, whatever, right? It's very it was very inefficient.
Yeah.
And like I've suffered from that a lot, so I can definitely attest.
Also, I feel like the whole EIP 1559 kind of integration into MetaMask has kind of hurt the experience for users on Avalanche because I feel like it's kind of unnecessary for Avalanche.
Yes, agreed.
Does Dexalot plan to, let's say, pair with like lending providers or maybe decentralized lending in order to provide, let's say, a similar experience to, Binance or Bitfinex, where you can kind of very easily take on some margin or some leverage to kind of increase, you're able to trade with?
Oh man, my one of my absolute favorite topics to sort of mention. And let me start with a story, right?
Mhm.
In TradFi, I go there because that's where my background is. None of the clients of banks trade in a pre-funded manner. Okay, if you're a customer of Citibank or JP Morgan or Bank of America, doesn't matter, and you're looking to execute an FX trade or a rates trade, whatever that may be, you are trading on credit, right? You onboard with them, they look at your balance sheet, they look at a bunch of things, and they're going to extend your credit. This means that you don't have to do the manual work of moving assets from one account to the other, blah, 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 all the time, right? And this is something that is sorely lacking in DeFi. So the short answer is yes, we would love to have a solution to integrate such that it allows for people to trade a lot easier on Dexalot, right? However, the challenge right now is a standardized mechanism that allows people to utilize their portfolio doesn't exist. I'll give you even an example. I'm very good friends with the strategist at Benki, and that gentleman, I've been saying, dude, how can we make you guys the standard for integrating into DEXs such that I can use my portfolio as my deposited capital and I could trade against it, right? Obviously, Benki allows you to deposit collateral and pull stuff out of it, but a much seamless experience can happen at an exchange. If I'm borrowing something and I want to actually sell it, it should be directly possible in Dexalot. So in that sense, yes, we would love to have it. I just don't see a great solution that is integrated into DeFi like Fireblocks is integrated into CFI, right? So if there is a solution, I think we would do it. That's one. The second aspect of this, of course, is futures, right? DYDX did basically they accepted USDC as collateral and they allowed people to bet on the direction of a whole gamut of assets, and they basically auto-liquidated your USDC if you messed up your bet, right? So that is a more tricky topic because futures are regulated assets, right? So we have discussed this as well, and we believe like adding that simplifies the interaction with market makers, adding that opens it up a little bit better for the the traders, not necessarily for investors. And it is on our idea map, if you will, to discuss further. But right now the focus has been the subnet, followed by some big UI improvements. We've actually received a lot of feedback from our users. So Subnet is going to be followed by UI and some order-related improvements. And then, you already know this, we've been focusing on liquidity and partnerships so that we can add more assets, we can add more liquidity through market makers. So yes, I would love to get to leveraged, margin style trading as well as futures, but it's a little bit behind with respect to some other features that we're working on right now.
It just made me think of another thing. So would the subnet, for example, be open to, let's say, other creators coming into the space? Let's say someone wanted to create a DApp on the Dexalot subnet. Would it be possible for a third party to come in and, let's say, offer lending services in order for, let's say, an arbitrage rate or a fee?
Interesting idea. Just knowing how open-minded the Dexalot team is, and just knowing how I operate, I'm going to say yes. It has to. We would have to think about what the solution is, of course. But by the way, it's going to be another blockchain, right?
Yeah.
If somebody wants to build something that directly synergizes with the exchange, I think, why would we ever say no to that?
I think it brings up a lot of really interesting kind of ideas that we haven't really seen yet because subnets are so new. Far you see people building sort of single-use subnets, but I think we're eventually going to see a subnet that has other players coming in to improve the services of that initial sort of reason of the subnet existing, right?
100%. And maybe the solution there is you build it within the subnet of a DApp, or maybe you have a subnet of your own that arbitrates across other subnets,
right,
and provides your services through bridges. The reason why I suggest the second piece is because we had to look into bridging a lot.
Yeah.
So that we could implement it for our end users, right? Because that is a real, and in fact, if anything, that is probably the more difficult aspect of building a subnet today, in my opinion. But like you said, we're very early. We are targeting to be the third subnet now, and I think there will be a lot of learning that will occur in the next few months to few years. And this stuff will get a lot more efficient.
Yeah, I think this is going to end up being one of the most interesting kind of aspects of the entire crypto market coming over the next year or two.
Yeah,
fully agree.
So, talking about things that are hard, I'm very curious what the technical challenges that Dexalot has faced along the way. What are the biggest headaches?
Sure. There have been a good number of technical challenges. I'm not going to say headaches because, knock on wood, the team, particularly our founders, have been fantastic at dealing with these problems. These are the kinds of guys that you can't seem to phase, which I really like. That's why I like, being part of this team. But, just to cover sort of high-level items. Number one, I think I kind of touched on bridging, right? Building the subnet itself is one thing, but then how do you get people who are in C-chain, and more specifically, how do you get their assets? And it's not just C-chain. How do we get people that is in Ethereum and get their assets to be able to trade in the subnet, right? The biggest challenge. And, think about it this way. Avalabs built a bridge. The infrastructure behind it is fairly complicated, and it's a partially trusted bridge, right? There's a number of wardens that perform, et cetera, and there's a lot of horror stories out there where bridges get hacked and people lose capital, right? Ronin Bridge was one of the bigger examples. So it was a real exploratory phase for us to talk to a lot of providers and figure out the best solution to implement, right? Nothing worked directly out of the box, if you will. And on the user experience side, when you use a bridge, you don't really want a guy to come to the bridge, move their asset through the bridge, which is a piece of user experience you don't control. Then they have to deposit into the exchange. Then they have to trade. Like, from a user experience perspective, it creates a potential friction point, right? So there was a lot of back and forth around, bro, how do we make this seamless? How do we completely abstract this functionality away from the user such that the user shouldn't even know that they're bridging. We landed on something with a couple partners, actually not one. We're using more than one partner to build capability to move assets, where the users won't know. The users won't really know that they're bridging assets from one chain to the other, which actually is very novel, in my opinion. If anything, credit should be given to, again, the Dexalot founders, Nihat and Cengiz. They are very good at innovating. Like, the exchange itself was written from scratch. It wasn't a copy-paste. Dexalot Discovery, which I think we touched on in our previous call, brand new solution that didn't exist before. And now this bridging capability where the user won't really know that they're bridging an asset is actually pretty cool as well. Maybe we could do a session with them so that they cover the technical aspects. But all I can tell you is even Avalabs liked our solution. Let me put it that way. We still have the wallet side where, yes, the wallet will somehow need to switch to the subnet to perform the trading activity. But from an end user perspective, when you deposit, the bridging will be taken care of under the covers, and you won't have to worry about it. So that's what we ended up. And obviously, the implementation of the subnet. Yep, sorry, go ahead.
And so I know that Avalabs is working on a similar solution that they've sort of like hinted that may come in about a year from now. How similar is the Dexalot solution to the Avalabs solution, if you know?
I don't know the details of what the Avalabs solution looks like. Originally, when we wanted to move to the subnet, we did have a conversation with them. And the reason why we had to build our own solution in the near term is because the timelines didn't exactly align, right? Avalabs is solving for a much, much, much larger sort of platform, while we basically wanted to get to the market ASAP to further allow for market makers to integrate. And it's difficult for me to comment on this. Okay. But they definitely reviewed our solution, and we got high marks. Let me put it that way.
Congrats. That's very interesting that you were able to build this, because I think the bridging is obviously the seems to be the most complicated part of this, because it's not created by Avalabs out of the box. So using, and then, my big question, which still stands, the major pitch for Dexalot, or one of the major pitches, is that it will be capital efficient from a user perspective. Like, there's going to be low fees, right? Bridging usually is sort of expensive. How is that going to play out in this case?
So there is going to be a bridging related fee, but it's a one-time fee because you're only doing it one time to deposit assets, right? So again, it's difficult for me to comment because we haven't turned it on, but the trading fees are going to be as low as possible. Now, one thing I should mention, by the way, you can't really make fees zero, because when you make fees zero, that invites a lot of automation, bots, MEV, all sorts of problems that can break your network because it can spam transactions, etc. So there will be fees, but we are working hard to keep them nominal, if you will. We don't exactly know what the fees will look like. We're still running some analysis, but it's going to be comparable, we think, to something like Serum running on Solana, which, order placement is 1 cent, and bridging will be a one-time fee.
Okay, so it may be advantageous. Let's say I want to do a trade on Trader Joe, to actually bridge it to a subnet and then do the trade there. Potentially, it would be even a better deal to do it this way, even though I have to bridge.
It depends on how it depends on how busy the C chain is, of course, right? So there's going to be a few things that you got to look at. Number one, the transaction fee on C chain versus the transaction fee on the subnet. If the bridge fee is less than the transaction fee you need to pay on Trader Joe, that's the transaction fee side. The second thing, when it comes to trading, is how much spread are you actually going to end up paying, right? If the TVL is low in an AMM, then the total spread you're going to end up paying is going to be much larger, and it will way dominate the transaction fee that you're going to end up paying, right? So those are the aspects you got to look at. But I think I mentioned earlier, we are looking at UX improvements where, like, we've heard this from a lot of people, like some people just don't want to look at an order book. So we will provide an interface which allows users to just single-click trade. There were some clever people who wrote some smart contracts which allowed them to do this directly anyways. So we will sort of build something similar, put a UI in front of it so that people can more easily compare alternatives to trade. That's one thing. The second thing is that functionality will also allow us to integrate directly into stuff like Paraswap or Yield-Yak aggregation, which, if people are using aggregators, they won't even need to know where they're trading, because crypto audiences are very adversarial. They hate it if you make them click an extra. And to be fair, a lot of people don't want to see the order book. They just want to get the best price. They just want to get executed quickly.
Yeah.
If you actually look at our smart contract, Dexalot already had the capability to do market orders. We never enabled market orders because of the fact that C-chain fees are unpredictable. And if somebody does a large market order, you would clear out a lot of levels on the exchange and you may end up paying a large fee. When we move to the subnet, where we can control the fees, market orders will basically become very feasible, and it will allow us to do one-click ability to execute without having to do all the steps manually.
I think that's actually a pretty interesting idea, because I suspect that there are some people who may be hesitant to bridge or stay bridged if they want to keep their funds available on one chain. So being able to perform an action like that would be pretty good volume.
Fully agreed. 100% agreed. And again, like I said, it allows aggregators to integrate with us. It allows, other applications. So when you have that capability, reversing the previous topic relating to lending, maybe Banky could build a feature where, they keep their users on their own platform and allow them to directly swap assets without leaving the platform, because they can just make a call back into our smart contract. I mean, it just opens up a bunch of doors.
Very cool.
Okay, I think last time we spoke, we were all sort of very bullish on Avalanche and the Avalanche Subnet. This was before this current bear market, which, in my opinion, gives more runway to another chain like Ethereum, because there's less demand to get on the blockchain as fast. Therefore, it gives time for Ethereum to get to Ethereum 2.0. How do you, like on a personal level or professional level, or in any way you want to look at this, how do you currently feel about subnets for the Avalanche and the crypto ecosystem? Do you still see it as big of a game changer as we had sort of previously discussed? And do you want to maybe go deeper into that?
Yes, definitely. I mean, since we last talked, there are a few things that happened, right? A good number of Ethereum L2s deployed. And, there were a lot of issues across the deployments, right? I'm not going to go into too many details there. Then we had the issues relating to staked Ether, right? Where the staked Ether value significantly diverged from the actual Ether token itself. And the reason for that was, multiple reasons, of course, besides the 3AC blow up. But one of the bigger reasons, in my opinion, is the fact that people staked their Ether, but the unstaking capability is still not there. Even if the merge happens, there is still some time before that unstaking capability comes along, while we have Avalanche with liquid staking, with all the features already implemented. So in that sense, my overall bullish sentiment hasn't changed, right? The funny thing about crypto is hype of something that will happen is like a weapon, right? I read a thread about this actually recently, and promising something to happen usually drives markets quite well, and until you actually see it happen, you don't really know, right? But in the case of L2s, there were a lot of problems, right? I actually believe the subnet model is significantly more powerful than the L2 model, and even if Ethereum main chain actually somehow reaches the speed, the throughput, the finality that Avalanche has, it's still going to be clogged, right? C-chain, when there's a very popular application, can have the potential to have very high fees, yada, yada, yada. So in that sense, I think the subnet solution, where apps can build their custom solution, is great. You can't really do that with L2s. It's not like you're going to go and create an L2 that is generic to an application, right? So in that sense, I'm still very bullish, because, again, if I give you an example from TradFi, right? If I am a bank, let's say I am a fairly innovative bank, which kind of like a funny thing to say, but if I'm an innovative bank, okay, I will still need to look at complying with my regulatory requirements, complying with my risk requirements, complying with my KYC mandates, and blah, blah, blah. And the only way to do that is if I build my own custom subnet. Again, it's going to be difficult to do that on an L2. It's going to be difficult to do that on a main chain. So in that sense, I think the customization capability, especially if Avalabs provides better tooling, better off-the-shelf features for it, is very powerful. So not a whole change in sentiment from my side. There is a little bit of pain, of course, from the price action, but I think the tech hums along, right? Throughout this volatile period, how many times did Avalanche go down? How many times did any of the Avalanche subnets out of the two go down? 0. So in that sense, I'm still a believer in the technology.
Yeah, the performance is amazing.
Yeah, the performance is...
Yeah, I sort of feel like the price performance is a great opportunity to get into Avalanche at a very, very interesting price. What are your views on Gamefi and NFT protocols and how they will use subnets specifically? How do you see that?
So I am very interested in Gamefi, both in Dexalot capacity as well as FireStorm Capital capacity. We are, on the FireStorm Capital side, we are involved with a couple of projects, Snail Trail being one, Pulsar being the other, and subnets for games that require a lot of transactions are a must. It's not even, this is not even up for debate, right? We've seen this with Krabata. If you're putting a lot of transactions on chain, you're gonna lose throughput and capacity due to other people's activity, and you want to maximize your ability to sustain, high transaction volumes for your users. That's why we see DeFi Kingdoms on a subnet. That's why we see Krabata on a subnet. So in that sense, I think it's a no-brainer. When it comes to NFT protocols, I am not too familiar. I'm not even sure what exactly an NFT protocol means. So if you can give me an example, I can provide an opinion. But
I guess the people minting NFTs, I know it takes a lot of block space to do that. So if you have like a specific project, you could have your own blockchain essentially to just mint or to exchange NFTs. So
okay, this one will be controversial. So there are multiple ways to mint, just like there are multiple ways to list assets. Like if we talk about assets being listed directly on an AMM, like you can look at the on-chain data, look at some of the very early big project releases. You're going to see a couple of wallets which bring in 200, 300 worth of AVAX, right? They front run people. They basically have a big node, or they have the capability to do MEV. They pump the price up and they withdraw 15,000 AVAX by dumping the tokens that they bought for cheap on the community, right? That's what Dexalot Discovery was intending to solve. NFT mints, in that sense, are very similar, right? If you directly try to mint an NFT, again, a bot operator, a savvy MEV sort of operator is actually going to be able to mint the NFTs ahead of others because, the retail guys are trying to do this via MetaMask or hopefully Core. Like, your mouse interaction is too slow for you to be able to mint these things. I actually saw some threads about one mint being fully minted by one participant only. Participant, funded a bunch of wallets. This is on Crypto Tour, and like he or she minted the entire mint. Now, this is one way to do it, right? And don't get me wrong, I love the fact that Avalanche is getting a lot of attention with NFTs. But there are other ways to do it. And I'll give you an example from Snail Trail. Snail Trail ran a whitelisting campaign for, a few months, right? Basically, they asked for their ecosystem, for the community to choose to mint. And if they choose to mint, ask them to whitelist an address with a very simple process, right? Once you have a list of addresses to provide whitelisted minting capability, you can run some strategies over it. Like, it's very obvious when people are trying to bot and get additional whitelist spots because the IPs will match, because a lot of things will match, and you can eliminate a lot of bad actors that way. I'm not saying it will prevent 100%, but by providing a whitelist anti-bot measure, you can actually cut down a lot of these bad actors. So I'm not sure if a subnet is necessary just for minting NFTs. I think there are simpler and well understood solutions. And quite honestly, I'm shocked that the marketplaces, and maybe they are, and I don't want to sort of blame anybody. I would expect the marketplaces to solve for these issues rather than making subnets. It's kind of like Uniswap solved a protocol level problem. This, in my opinion, is a sales problem where you're not creating an equal environment for participants to basically mint the NFTs. So I think it's a marketplace can solve this issue than a subnet. Hopefully, I don't get slaughtered for these.
Interesting point of view. We love controversy, so I mean that's great.
My trolls love some of the things I say as well. There's plenty of trolls, man.
So just on an ending note, is there anything in the past few months or weeks that has surprised you, or that you've learned about Subnet that you didn't quite understand before?
Tough question. I mean, we've been knee deep in the Subnet related discussions for months. There isn't anything new that I've learned, let's say, but I am very excited about them. Like, I'm very bullish about them, and I guess one thing that I did come across is there are a lot of projects out there who are implementing their own subnet already without direct assistance from AVALMs. So in our case, subnet was always in our roadmap, and because Dexalot was seeded by the Avalanche Foundation / Blizzard, we had a lot of conversations with Avalabs even before the initial subnet was released. But seeing that other projects are picking up the SDK, the capabilities provided by Avalabs, and having success in deploying their own subnets to test networks is quite encouraging. So that is the pleasant surprise I've come across over the last few months, let's say, or few weeks.
Very nice. I think this is a good place to end our conversation, which was fascinating. Thank you for coming on and discussing all this.
Another awesome conversation.
Thanks for having me, guys. It's always fun to talk to you guys.
So for anyone still viewing all the way to this point, please, thank you. I hope you enjoyed it as much as we did. And please follow us on Twitter, on YouTube, and please like this video and so on and so on. It will make, as usual, I will say, Jared very happy. All right. Thanks a lot. Yeah.